Hello and welcome to the ARMR Report. Today I'm going to share with you how we use day trading algorithms to capture a 25% return in 2 hours trading Canoo, symbol GOEV. The basic premise of the ARMR Report is to read and react to what we're getting. I'm Brett Rosenthal. This will be an ARMR education video for you. You can find it on our ARMR education playlist. I'm going to take you step by step through how we use day trading algorithms to combat stop hunting algorithms and benefit from it. And there's no better trade and an example than what I'm going to show you right now. So if you enjoyed this conversation, don't forget, hit that like button, share the video. That helps us out, helps us build our ARMR virtual hedge fund. I'm Brett Rosenthal. I founded the ARMR Report, and the design here is to share information both on a fundamental, technical, and algorithmic basis, following risk management rules to protect capital and capture upside together. So here we go. I'm going to take you step by step through the process of how to use day trading algorithms and a simple technique that you can do. This is an algorithm. I'm going to share with you a piece that you can write on your own, quite frankly, to capture upside. Here we go. We did it with Canoo today. 25% in 2 hours. So you're looking at a daily chart of Canoo right here, okay? For those of you aware of Canoo, and by the way, let me know if you're aware of Canoo. Did you guys trade it? Drop it right down here in the comments section if you traded it and how you traded it. I'd love to know. Just give me a thumbs up if you traded it. That would be great. And if you have any questions about a stock that you think might work on an algorithm, let me know what the stock is. I'll take a look. And if I can show you step by step how we trade it today, boom, I'll do another video for you. All right. So step by step, what you're looking at right here is a 3-minute bar chart of Canoo throughout the day. So right here is the line of demarcation. The day starts right here. It was a gap up this morning. For those of you unaware, it's a story where Canoo is working with Walmart. That's what got the excitement going on the stock. All right. And so what we look for, each bar that's blue is an up bar, red is a down bar, and all the lines you see are what we call the ARMR price movement profiler. It's the algorithm we use to help us find locations and then look for trading triggers, both buy and sell triggers. Now, on our live trading desk, and we share this information all day as we're trading from 9:30 to 4 with all of our ARMR insiders, we have 7 specific ARMR triggers we use to get long a trade, right? So 7 specific triggers that are incorporated in our algorithm. And this is how we use day trading algorithms to capture upside on a stock like this. So this is our favorite trigger. And I'm going to blow it up for you right now. It's our volume reversal trigger. So step 1, and we're going to just blow up this chart right here. Stock opens up. Every bar is 3 minutes. Okay. The black dots are the volume weighted average price. Standard deviations above and below, Fibonacci extensions above and below, and average true range above and below. I call them ARMR because they're all infused with a volatility component, and so they change per asset per day. All right. What we look for are these green dots right here. So what we wanted to see was selling that comes in, these big red bars, and you see it right here. There's a green dot at the top. Now, the key here is the green dot tells us that a lot of volume is trading in that 3-minute window versus X amount of bars ago. Okay. So a stop hunting algorithm is designed to sell till it finds the stops and hits them. So there's high frequency trading algorithms that sniff that out. So instead of being upset about that, what we do is we turn it to our advantage and we try to identify when that's happening, when are stops being run. When it happens, we get that green dot in our algorithm telling us there is a potential for a volume reversal now, okay? So stage 1 of this process is to get the selling, a couple of big down bars like here. Green dot tells us stops have just been run. Big volume just hit. And what we look for is the high of this bar to be taken out within 12 minutes, which is this bar right here. That's the initial buy opportunity. All right, now let's move on to stage 2. You can either buy that white box when you take out the high of that bar, or sometimes when we're this close to the volume weighted average price or the ARMR VWAP, we like to see that breakout above the VWAP. So right in here is where we're getting long. This green box right in here is where we're getting long this morning at around $3.83, $3.79 to 83 cents. Okay. Stage 3. So stage 2 is where we're getting long. Stage 3, and this is the key here on any strategy that you're following in, and this is what I do for risk management purposes. Okay, so I'm going to share with you now a major risk management rule. If you find this information that I'm sharing valuable, hit that like button. Okay, here we go. Risk management rule that's important. When you get on a trade that's working and it pops to a target that's tight, you book some profit and raise your stop to break even. What you want to do is take your emotions out of the trade as soon as you can so you can ride it as long as you can. Okay? So in our algo, what we do here, and I'll blow this up again for you to see it. Now we'll go like this, okay? So this blue line right here is the average true range high of the day. So on a normal day, right, the average true range will be right here, and you'll find resistance come in and rejection. So if we're buying it right in here and it pops to the blue line, we take off a percentage, maybe 25%. We're going to carry 75% of the position. We raise the stop to break even. And now we can't lose money on the trade. It's a winner no matter what, either a huge winner or a small one. Now, here's the next step in maximizing your returns when day trading using algorithms. You recognize that we're going to trade a lot of names. Some of them, most of them, aren't going to look like GOEV. They're not going to go up 25% in 2 hours. Okay? So the key is you have to stay long your winners as long as possible to pay for other things that lose money or go back to your break even. You have a small gain. Okay? So what you do is on the pop, book a percentage, raise it to break even, and don't raise the stop too aggressively. This is a mistake a lot of new day traders make. They raise their stop so aggressively, they take themselves right out of a huge move. Let me show you what I mean. Okay, 1, 2, 3, 4, 5 down bars in a row. This right here could have scared a lot of people out of the trade. Maybe not you, but a lot of traders. I know some guys that get out if it's 2 bars against, 3 bars against. Okay, and what you would miss, of course, is an explosive move over the next hour. So the way we avoid that, again, to wrap up on that thought of risk management, is to book a piece on the initial pop, raise to break even, and then leave it alone and let it play out. We rode this stock with the rest of our position all the way up. Now, why do we exit at stage 4? How is it we capture almost the entire move on the day and cap it out at a 2-hour 25% return on our money? Okay, so now I'm going to share with you how we use day trading algorithms for sell signals as well as the buy trigger. And again, if you find this information valuable, go ahead and smash that like button. Okay? If you've got questions about this and you want more detail, boom, put it in the comment section. I'll read all your comments and I'll get back to you as soon as I can with more definition on how we traded Canoo, GOEV, for a 25% gain in 2 hours today. But this exit right here is just as important as the entry. And it's a reverse of our favorite trigger, which we call the ARMR volume reversal trigger. Watch how it works on the upside as well, on the sell side. I'm going to zoom in for you again. So we're riding this thing all the way up. We're just killing it. Wow, this thing's just running, running, running. None of these wiggles get us out. Nothing concerns us. It's going. Where do we get out? Okay, right there. What you're going to see is a volume dot at the top of this bar telling us huge volume on this move. Please notice that there's no, after these dots here, there's no volume for almost an hour as it screams higher. And right there, we get the volume dot. We know our time is limited now on this trade. And so what we're doing is we're using the low of the volume bar as the stop. And so it comes down here, here, and we're gone right in here. Before this big down move here, we're out right here, booking what ended up being the largest, gain we could book right in here on that move. Okay, so that's how we use algorithms to day trade and capture returns on our live trading desk. We do it all day. I'd love to work with you at this level. So feel free to subscribe to this YouTube channel to get used to what we're doing. You're going to find other videos that you can watch step by step, just like this one. In fact, using the same trigger. This time it was on Canoo. You'll see a video right here where we're using the same trigger, trading volatility. Okay. And of course, if you'd like to subscribe to the ARM Report, hey, take a look at the website, armrreport.com. I'd love to work with you on the trading desk.